Yo, what's up guys? Welcome back to this YouTube channel. I'm IpBoyles, your favorite mentor. Today lesson, I'm going to teach you guys how to place the best stop losses on your trade. So the sponsor of today's video is Wix.com. Wix.com is an online platform where you develop and build your own website. So today, go sign up with Wix and start building your own website for your businesses and advertisement or your product. So if you don't know, placing their stop losses is very essential on your trade. So I'm going to give you 3 tips on how you can make sure you are placing the best or the right stop losses on your trade. First, always place your stop loss at point of invalidation. Invalidation is not just a random place where you can just place your stop loss 5 pip or 10 pip on your trade. Invalidation is a place where if the trade hits your stop loss and finally you know that you are wrong. So point of invalidation are your structural levels, your supply and demand levels. Okay, let's say you are a supply and demand trader. You always place your stop losses above or below your supply and demand setup trades, you understand? And for structural traders, let's say high of the day or low of the day. So that's where point of invalidation, when the trends go below your supply or demand zone or below that your high of the day or high of the week, then you now know that finally that you are wrong on this trade. So you don't just place random trade or random stop losses on your trade, because sometimes you can just break even on your trade that hasn't already hit your first TP, and when you place your stop losses or break even thinking that maybe the market can just push away and then hit your TP, you just leave your trades to run. Place your stop losses at the best point on the market so that you will not get weak out or get hit out before they move. You don't just place stop losses on random place where you know that market can fight, can retrace and come back there and hit your stop loss. Because when you are on a trade and the trade just hit your stop loss and finally go to your favor, it really pains than the market hitting your stop losses on a normal position. So you take your trades, put your stop losses at the best place. Second, have a stop loss limit on your trade. So what is having a stop loss limit on your trade? Having a stop loss limit on your trade is based on your RR. You don't just place stop loss on your trade. You risk 1 to get 2. You don't just risk 1 to get 2, understand? You risk 1 trade and then you get 2 or 3. That's what we call 1:1, 1:2, and 1:3. So you make sure that your minimum risk to reward, you have to be 1:2. You can target 1:3 to 1:5. So but make sure that your minimum risk to reward is 1:2. So what do I mean by having a 1:2 risk to reward? Okay, let's say that on your pay, you know finally on whenever you enter on a trade that your pair always reach 30 pips or 60 pips on your trade. So if you are targeting 1:3, you must make sure that first of all that you know how much you want to risk on that trade. You know how much you want to risk on that trade, we let you know the kind of stop losses that you'll be placing. So let's say that you have a 10 pip stop loss trade and then you have about $10,000 on your trade. That means if you are risking 1% of that trade, you're risking $100. And then if you are risking $100 with 10 pip stop loss, you must make sure that you are entering with 1 lot size. So risking 10 pip on a trade is like 1. Targeting 20 pips is 1:2, 30 pips 1:3 on your trade. So this is how you place a stop loss limit. You don't just place stop loss and let the trade run. Always know where you to exit and know where to take your first TP. Okay, let's say that your trades always move 60 pips per day. That's your minimum pips or to catch on your trade. Then you have 20 pips stop loss or 10 pips stop. Okay, let's say you have 10 pips stop loss, and then if that trade moves about 60 pips, that's about 1:6 on your trade. That means you risk 10 pips to catch 60 pips. You target pips based on RR. That's the profitability way and consistent way to trade forex trading. You don't just place 10 pip stop loss and you don't know where to exit, you don't know where to place your first TP, you don't know where to place your second TP. That's a very wrong part of it. So today, start making your trades, start planning your trades, start targeting the kind of target you want to have on your trade. You place trade 1:2. If you want to target 1:2, that means you have 10 pips stop loss. Then if you are targeting 1:2, that means you'll be targeting 20 pips. 20 pips, you exit TP1 or you exit everything immediately. If you have a 20 pips stop losses and you are targeting 1:2, that means you are targeting 40 pip. If the trade move 40 pip, you close first TP or close everything. So this is very easy, and I hope that this will really help you to grow as a trader and also help you to identify or define your trading plan for you. Number 3, this is the last part of this video. Smash the trade if you can't place your stop loss at any point of invalidation. So there is no need of placing trade on a random fixed point where you know that this is the maximum level where you're supposed to put your stop losses. So there is no need of it. The one mistake which traders do is putting a very tight stop loss where they know that this is not the right place to put their stop loss. They will just put it just to increase their leverage or increase their loss size. I want to show you guys how you can start placing your stop loss on a point of invalidation. So yeah, I'm a supply and demand trader, and also this example is based on supply and demand and other strategic concepts. You can apply it at anywhere. This 15 minutes demand zone was drawn, then I was waiting for markets to come back, understand? So we have two type of entry. We have aggressive entry and we have conservative entry. Aggressive entry is whereby you enter the market once you enter the market with no confirmation, while conservative is whereby you enter with confirmation. Beginners will kind of place their stop loss just below the demand zone, which you watch here. This is below our demand zone. So what would have market done to you if you have done something like this, is that it would have just tip you out and run to your direction, which when you come back to the chart to check your running trade, you will see that the market has already tapped you out, then run to your direction. So it's not very advisable to do something like this, you understand? Instead of doing something like this is not your invalidational point. This is the point of your order block. We call it order block, or you can call it demand zone or support zone. You can also call it support zone because this is the support level. So if you watch, here is the low of yesterday and here is the high of yesterday, which is a structural point of this move. So you would have put your stop loss below the low of yesterday, which is where I'm pointing right now. So if you have done something like that and put your stop loss, just make sure your stop loss is where you want it to be, you understand? It's not just about 10 pip or 15 pip. 10 pip times one lot will give you $100 loss. So you just kind of place it like that. Instead of maybe your stop loss would have 12 pip, your normal stop loss would have been 12 pip, then you can reduce your lot size so that you can give your trade a breathing space to reject. Here is a point of invalidation which price didn't hit us. Then this is about 9 pip, okay, 8.9 pip. You would have just make it 10 pip to give a breathing space for the trades to run. So you would have seen that the market's an aggressive entry type. If we go down to our 5 minutes time frame or 3 minutes time frame, we'll see that we'll see a good confirmation at this point, which I'm going to go to my 5 minutes time frame to show you guys the type of confirmation that we would have taken on this type of trade. So let's wait. Okay, sometimes chart can be very, very slow to load. I just do my major analysis on my desktop, then I use my phones to execute my trades. So you see this type of move. So let me just zoom it a little bit, then I have to map out the confirmation. So you see we have two type of confirmation trade that I use. I told you guys I use 3D drive and also I use choke entry. So before I use choke entry, I must make sure that it's not coming with 3D drive. Understand? Sometimes you might see a choke confirmation, but at the last of the trade will just take you out before running to your favor. So you see that we have this choke break of structure. Okay, let me just manage it. And after this break of structure, the price taps to the 15 minutes demand zone, then reject, break the lower 5 minutes structure. Then here is your entry point. You would have seen that market would have just take you out, even take your lowest stop loss level, because some people want to put stop loss here and also here. So you see that sometimes you adjust your stop loss. Make sure your stop loss is at invalidational points. So let me bring out something. Okay, so this is our invalidational point at this line here. So this horizontal line here is our invalidational point. You see that this is the low of yesterday, low of yesterday. So you see that you entered here, the market came below, but it didn't take low of yesterday out. So you are very safe on this trade. So this is the first confirmation that always look for. But at the last, you see that the market formed a 3D drive confirmation. So I always talk about 3D drive confirmation on my lessons, which you know that 3D drive is first touch, second touch confirmation. The choke entry came with 3D drive. So that's why if you are entering on choke, make sure that it is not coming with a 3D drive. You look for your first touch. If you have seen a first touch, then just align the charts to your second touch, first touch, second touch, and third touch. Understand? So if I had wait for a little bit, I would have just entered after the market manipulated some people right here, some people right here. So you see that I would have had a little more bits, like 5 pips stop loss or 10 pips stop. I would even adjust it because I want my trades to be safe. So this is a good confirmation trade. You see that this 1:6 RR trade, 1:6 RR trade.